Well, folks, welcome to a very interesting This Week in Crypto this week. We've got a ton to cover. It's been an absolute roller coaster as far as market swings have gone. If you like volatility, this has been your week for sure. We can see here, looking at the 24-hour price differences for our top 100 assets in crypto, and it looks like it's telling quite a story. But if I switch here to a 7-day chart, oh boy, yeah, it looks like we're still down considerably all over the market landscape. So we're going to dig into that a little bit. But first and foremost, I'd like to thank Maxim for holding down the fort last week. Maxim, how are you doing?
Good. Thank you, Brian. Was good. We did it short, relatively short, and we pointed out if you're looking for bottom, there are a few metrics you need to get confirmation there is a bottom, which was timely. It was, I hope, saved someone for fishing the bottom. And let's see where we like this week. But yeah, I was missing you, but I did it a bit different way.
Yeah, well, thank you once again. It's definitely great to be back, and I'm sure Maxim showed some pretty important metrics in terms of how to identify bottoms, because at least for now, it looks like one has formed, even if it's just a short-term bottom. We saw one in the past day here as Bitcoin dropped to just around 2,600. Ethereum was down a little below 1,800 at one point, and now we can see Bitcoin back up at 30.6K, Ethereum back at about 2,100. And of course, altcoins had been absolutely hammered, right? So pay attention to how high a lot of these percentages are in the 24-hour term and how much they are still down over the past week here. You can see one anomaly here, and this is actually a stable coin, which was all over the news, Terra USD, the associated stable coin with Terra Luna, which has also, of course, been crushed. And it is no longer even in the top 100 market cap assets after being as high as around 6 or 7, I believe, just a couple months ago. So it's been a pretty crazy turn of events in terms of, the news stories between Luna and Terra USD and Tether just yesterday. But all in all, if you've stuck with it and, whether you bought the dip or you kind of just held, you can at least be pleased with some short-term relief here as things have turned positive for now. And, there's a lot of reasons as to why. One of the biggest, as usual, would be the correlation with the S&P 500 that crypto has. And by the way, as I say on every call, what we'll be discussing here is not to be considered investment advice or simply analysts who are going to navigate what metrics are indicating now and what typically happens with prices when these indicators pop up in the past. So with that out of the way, we can see the last 3 months of Bitcoin here in green, the S&P 500 here in teal, and gold price here in gold, and how much they have dropped. And you can see the clear bottom that occurred yesterday, I should say 2 days ago for Bitcoin. And after a little bit of choppiness here, it has started to rise again, but keep perspective in mind. We may start to see Lambos and people screaming buy the dip all over the place now that they're seeing a little bit of a sign of that being the right play. But that doesn't mean it's the right long-term play yet. And we're going to do our best to see just how healthy a turnaround can look here with all of the crazy things that have happened. I'll zoom in a little bit too, because I want to show just how much things have at least shown signs of turning around. We can see the bottom here and how much it's jumped thus far just in the last couple days. And look at how the S&P has risen too. It's only been open about half an hour, but overnight trading futures were already looking up. So if the S&P 500 was open right here, you would no doubt see it kind of fluctuating in the same way that Bitcoin has on the way up. Meanwhile, gold just continues to plummet, which is also quite interesting. This was kind of expected to be one of the sectors that did pretty well after the FOMC raised interest rates. But so far, precious metals are pretty much being ignored right now, and eyes are on kind of a bounce for the S&P and crypto, which is good for all of us looking at crypto, assuming we're bulls here. Anything you want to add as far as like the correlation and just the general market landscape right now, Maxim?
There is an interesting development going on now on inflation rates. If you take 10 years treasury bonds or Deutsche bonds, then you will see that there is very interesting development. It's a short time, only maybe like three days, but the rates or inflation, based on what speaker latest put on it, it's decreasing. Yeah, and it might be. We will cover it probably better next week. We need to wait what kind of price structure develops there. It's possible that similar like we've been very early, I don't know, 6 months ago, before inflation was talked or Fed acted or said anything about, you could see it on the price. It's a key information, and everyone really has to pay now. How inflation develops on treasury bonds and related instruments. I observe on the treasury German ones, say enough. They're a leading indicator. Yeah, they tell what Fed will do, what the European Central Bank will do, and they do it, and then market react to what they do and what they say. But the information is displayed on the price chart.
Yeah, it's interesting.
For inflation, for treasury bonds, yeah.
I think it's pretty fascinating that even a year ago, we weren't even thinking about how much treasury bonds would impact crypto. But because we've had such a sustained period of time where crypto and the S&P 500 have been closely tied to one another, it's now very relevant, right? Like going back to around the beginning of the year, we've seen how much real world equities markets are impacting where crypto goes next. And that could be the new reality. There will undoubtedly be a point where there's less correlation than there is now, especially if one or the other really starts to break out. But I think you're right, Max. We have to look at things like treasury bonds and yields and all sorts of things that normally were independent from anything going on with cryptocurrency. So
yeah. It's at the root. And secondly, once we know this is the root, we need to observe stories which are people say there will be time. I am not sure if we're there already, when they say inflation is so terrible and can be contained that everything has to crash. Something we should get to some extreme sooner than later.
Yeah.
Inflation expectations.
Absolutely.
Which will mark possible turnaround. But yeah, let's continue now. Probably a bit more on crypto related or purely crypto related. Yeah.
So obviously with this little mini bounce here, we can see just how much trading volume has risen. This is the highest combined spikes that we've really seen, going back all the way to about 3 weeks after the then all-time highs for Bitcoin and Ethereum. We've also seen a lot of independent spikes for assets like BNB, Cardano, but never, I mean, the last time, like I said, was in early December that we've seen this many combined spikes in trading volume. And clearly there is some massive interest in this dip. And we could see that it was really getting started even before the bottom occurred, which is typically the case. It's not just going to suddenly see a trading volume explosion and immediately turn around. Usually there's 1 or 2 or 3 waves. In this case, it looked like around 2 before we really hit the bottom. And this, again, may not be the bottom. This is just one of the largest bounces, at least we've seen, especially in terms of altcoins, since really the beginning of the year. So trading volume is up. That's a good sign. We can also look at, if I remove all of these really quick, whale transactions are extremely important to check out right now because they were giving us some pretty interesting telltale signs. You can see how much it really rose. I can combine these bars a little bit and we'll just look at one day. So this is a big spike here. It may not be fully noticeable, but like once we saw this, which was 2 days ago, this told us that this was the most whale transactions that had existed on the BTC network since late January. That's significant. And then yesterday, they were even higher. This was the highest spike in whale transactions since December 4th. So that's a 6-month high there. Clearly, some big players are taking interest in this dip. Most of the time, you can presume that this is accumulation going on right here. It isn't necessarily guaranteed, but it would be very, very rare for whales to see the kind of dip that we've had and decide that they're going to dump their bags further. That said, you know, we have seen some offloading. If I switch to the absolute values and look at the percent supply, check out Bitcoin's supply here. They actually have shown that they're holding less and less of the supply. It doesn't necessarily mean they're all just collectively dumping. It could mean that there's been a little bit of independent offloading and just more small bags are coming back in, but that's still a concern, right? So even with all those whale transactions, the amount of supply held has continued to go down, not up. Let me switch this to Tether because we'll be touching on Tether a little bit soon. Check that out. This was the largest one day, and I don't know if you caught the post that I put up yesterday yet, Max, yourself, but this was the largest one-day drop in supply of 100K to $10 million Tether addresses in the history of Tether. So clearly the unpegging from $1 where Tether dropped down to 95 cents itself, that had a big impact on whales' confidence in the future of the #1 stablecoin in crypto. And that's a concern as well. So there's a lot less buying power in terms of at least Tether. I wouldn't be surprised if they moved over to some other stablecoins. And there's less Bitcoin held now. So in terms of bearish arguments, this is one of the biggest in my opinion. What do you think on this, Max?
You mean on the holding of Tether?
Yeah, especially Tether and even like the dumping of Bitcoin supply here.
It's a good question. Yeah, it's a good question. On one side, once you see strong moves, it's always interpretation you do. It's either realization of what's going on, or is it the final move when those who've been resisting finally said, okay, now it's time to act. Now, if we consider how long have we been into the current price actions, it looks more like a realization of some level of panic. Yeah, it does show some level of panic.
Yeah. And whales have been wrong before, right? Like if you're that concerned about the Tether dumping, check out USDC here. They've absolutely been going crazy in terms of scooping up more supply of USDC. So, you know, it's not as though whales are jumping out of crypto. They've just hopped over to a new stable coin more than anything. And that appears to be the case here.
Yeah, flight to quality. Oh, by the way, yeah, did you see we published yesterday a very short Pulse Insight flight to quality seen on MakerDAO and DAA?
Yeah.
How it happened actually started to happen even before the peak of, or officially the peak of Luna, but looks like some smart folks already seen it. Yeah, a little bit more down. No, not this one.
This one.
Yes. Yeah. If you see, yeah, they started to increase massively their DAI holdings like 1 or 2 days before carnage in Luna Land. And this was interesting to see. And then we investigated further. Actually, there was even accumulation of MakerDAO. I mean, Maker coins happening by big whales also few days before, almost 1 week before Luna collapsed. So there are smart people out there who observe very closely the risks and they act accordingly. And you can see it on the data. It's so cool to see it on the data. Probably we can even find out what wallets these are. Not probably, we can find out what are the smart wallets, really smart wallets. Not that some other platforms called smart wallets. This is the smart ones. You can see they know what they're doing is do it on time.
It's super fascinating seeing just how this accumulation occurred 3-4 days before Terra USD's collapse. Clearly, some people knew that something was going on here.
Yeah,
that's a great find for sure. And then as far as Bitcoin metrics, I mean, we've got a ton we can go over here. I'm going to try to kind of spread the subjects around today because I know we need to get to Tether and touch on Luna and Terra USD, but it'd be good to just touch on a few key metrics for Bitcoin first and foremost, considering this is obviously a polarizing time. And as the title states, we're going to try to figure out whether this small bounce right here is sustainable and can actually recover back to prices we were seeing back in April and March. So for starters, I mean, circulation is up big. This is the biggest 3-day stretch of circulation that I've seen in over a year. We did have one day back here on February 28th where circulation got higher than these 3 days here. But overall, this is a sign that the dip has finally drawn tremendous interest at rates that it wasn't seeing anywhere else beforehand. So that is a good sign. For sure, we want to see utility going well. What we don't want to see is passivity on a big dip, which shows that people are just complacent and not interested in causing volatility, and the opinions are not polarized, which they very much are right now. The bulls and bears are both extremely vocal about the situation that we're in right now. So that's good to see. Daily active addresses are up a little bit, the amount of unique addresses that are interacting on the network. Of course, last week, right after the FOMC announcement, that's when daily active addresses were really soaring. They've come back to semi-normal territory, still higher than usual. We've talked about how we like to look at 1 million or more daily active addresses as a good sign. And it did hit it twice in the last 3 days, 1.03, 1.04 million. So that's great to see there. MVRV, this is a big one. So let me mark negative 15% down here, and positive 15 is going to be off the axis. So let's go to 6. Let's go to 1 year, that is. There we go. 15 and negative 15, good enough. So as we've said many times, when we see MVRVs below this opportunity zone line, that typically is a time when we see bounces. Now, we did bounce as expected, getting below this opportunity zone, and we're now back above at around negative 10%. So still in a less risky spot than usual, but not nearly as salivating of a point as it was just a couple days ago when you saw average returns in the 30-day range really get down to almost negative 20%, which is very, very rare for Bitcoin. It's much more prominent. Like if we just took a random, let's look at Chainlink really quickly, and then I'll switch back to Bitcoin. And we look at the 30-day MVRV. Check out that. This is the last time we saw MVRV this low was way back last June. So an 11-month low. Average trading returns for 30-day investors, people who opened or added to their positions in the last 30 days, negative 39% it got down to, 39.5%. And because it started to bounce just a bit, and there are so many people buying dips right now, the MVRV has rocketed back up to about negative 18, which is still below Chainlink's negative 15%, but not nearly as juicy as it was. So take that with a grain of salt. That means that probability states that we will continue to go upwards, at least until we're out of the opportunity zone. But that isn't a guarantee by any means. And considering how small of a bounce this has been compared to the massive amount of damage that has been caused to the market cap, it means that people were expecting this to an extent. So this is what a lot of altcoins look like. It's not just Chainlink. I just thought it would be a good example of a higher end ERC20 that we can look at. And this is going to be an important thing to take a look at. I'll look at the MVRV Sandsheets model with you guys here in a bit on this call, but I want to get back to a few more Bitcoin metrics first. So we hit on MVRV. How about weighted sentiment, guys? So we've seen some roller coaster perspectives on Bitcoin from the trading crowd as of late. We went through a long stretch where traders did not believe that Bitcoin could bounce, right? They were very negative. We saw even back to February 20th up until April 11th, negative sentiment was arising. And during that time, the price mostly rose. As soon as it dropped, everyone got positive and figured it was time to buy the dip. The crowd was wrong once again, and the price went further down. And then they became very negative here. Right at the tail end of this, that was around when we hit the bottom, and then it started to get positive just as the price bounce was beginning. So now we're sitting around neutral range. But this 1 year stretch illustrates the importance of weighted sentiment very well, considering the extremes on the high end almost always show that prices are moving down, and the extremes when people are super negative almost always show that prices are hitting bottoms and about to go up. It's not going to be perfectly reliable. There are plenty of exceptions like this where we're super negative, price goes down anyways. But all things considered, if you factor in this metric into your strategy, it's going to lead to good results more often than not. Supply and exchanges. Interesting what's been going on here too. Look at how Bitcoin has actually seen its highest increase in terms of a short, like just within 1 week. This was the highest increase in supply and exchanges in the past year. And it even goes back to mid 2020, the last time we saw an uptick quite this high. We're currently sitting with about 10.3% of Bitcoin sitting on exchanges. It got down as low as about 9.9. A year ago, at its peak, it was at about 14.3%. So all things considered, it still looks like a lot of Bitcoin is where we want it to be, and that's away from exchanges. So that's a good promising sign for the long term on Bitcoin. We touched on whales, exchange flow balance. Check out that massive spike here, guys. This was the second largest. No, I take it back. This actually, it exceeded the largest spike that we had seen back on May 18th of last year. And this was, 40.6 thousand Bitcoin moving to exchanges in terms of net. So combining the inflow minus the outflow, there's a positive difference of 40.6K moving to exchanges. That was huge. And it occurred as prices went further down. So clearly there was some plans to sell here. And then once they finally did, look at this big outflow spike, which was the largest in just about 2 months. And that's kind of, one of the primary markers that we've seen is the amount of exchange activity and whether or not it was on the positive end or the negative end. And when it's on the negative end, it generally is a promising sign that prices can move up, like we saw with the largest outflow spike leading to a bounce. But that's not always going to be the case. This is definitely a bit of a noisy leading indicator, but it does work very well as a supplement along with things like MVRV, circulation, whale activity, things of that nature. Network realized profit loss, another very interesting development. We had our largest negative spike by far. This indicates the amount of people that are trading out of Bitcoin at a loss, similar to another ratio, which I'll show in a second. But what this does is it basically shows how much winning and losing is going on the network at any given time. And a lot of people were sealing in losses right here, telling us that prices were likely to bounce soon because there needs to be an event that allows traders to equal out on the other end. And if there's too much losses, too much losing going on, there's going to be something on the other end where you'll at least see some of these positive spikes. And so far we haven't, and it's a good sign that we've bounced a little bit, but we aren't seeing huge positive spikes like we saw back in October, November, and other occasional ones that we saw earlier this year. Those would indicate that a top could be forming, but we really aren't seeing anything like that right now. So good sign there. As I mentioned before, we have this ratio, which I really like, and I'm studying a lot more these days, called the ratio of daily on-chain transaction volume in profit or loss. That's a lot of words, but essentially what it means is the difference between transactions that are going on while that Bitcoin was in a higher price compared to when it first entered that address versus lower price when it first entered that address. So the more trading that's going on while in profit, the higher these bars will get compared to the amount of trading going on while traders are at a loss. And generally speaking, when you see Bitcoin here in blue having really high bars, that's a sign that tops could be forming. It was perfect right here, perfect right here. These are weekly views, by the way, instead of daily. So understand that it's kind of a zoomed out perspective compared to a more noisy daily view that I won't show this time around. But you can see, like, even right here at the all-time high, nice big positive spike on the way up. You know, there were some signs that we would correct, which we did. And then negative wise, that's when the bottoms tend to occur. And the more negative it gets, the more confidence this metric has of a bounce. And we clearly saw that one there. This one was a fake out for sure, but obviously it wasn't as large of a negative spike. And then this one called it out pretty well. Right at the tail end of it, that's when things started to bounce. Right now, we're actually sitting in slight positive territory once again. So traders are beginning to take profit even on this small bounce because they likely bought the dip, and they're trying to jump out quick while they can at least salvage some profit after the enormous amount of losses they've taken over the last month and a half, or even the last 6 months if they've been holding since the all-time high. And then on the Ethereum side, while we're here, check that out. That's the largest negative spike that we've seen in the past year. I think it might actually be multiple years, but I haven't checked. Yep, so definitely the largest spike in the last 2 years. Let's look like since 2018. So now we're seeing some rival spikes. The last time we saw a negative spike that exceeded where we're at now is November 2018, mid-November. So we're talking about 3.5 years since we last saw the ratio going this negative for Ethereum. And that is a very, very good sign, folks, because when Ethereum sees these high negative spikes, this was, of course, Black Thursday, that's when prices tend to rise, especially for ERC20s. If you're looking at some of those assets, which Santiment has a lot of metrics on, this can be a really good indicator. And this is one of the most bullish arguments right now, considering that the ratio shows that if I'm understanding the number correctly, right around negative 0.5, that would mean that there are about twice as many transactions being taken at a loss as there are transactions taken in profit right now. And historically, that's led to some good bounces. All right, heading back to Bitcoin for a few other updates. Development activity, pretty much normal right now. Social volume and dominance. So we'll get rid of volume for a minute. We do see that volume has seen an uptick here, and this is the most talk about Bitcoin since mid to late January, so almost a 4-month high there. Social dominance, though, is something I always think is important to pay attention to. We were starting to see a bit of a rise, but it's actually fallen, not because Bitcoin is bad and everyone suddenly doesn't want to talk about it anymore, but because compared to Bitcoin, many altcoins have bounced way, way higher. So they're starting to grab a lot of attention again. And if Bitcoin's social dominance, stays below 15% or even falls back down to like 10%-ish or so, that would be a bad sign that people are starting to get a bit too euphoric and expecting that it's alt season once again. And alt seasons tend to occur most prominently when people are blindsided by it. And considering the 12-hour stretch that we just had in crypto, people won't be blindsided by alt season right now. Everyone is kind of hoping that it's going to happen because of the amount of recovering that's currently happening. Age consumed, not too much. We've seen a few notable spikes here, showing that some dormant tokens are moving, but nothing really significant. The last time we really saw big bunches was last July, and that actually marked a local top. These are probably better top indicators, so it's a good sign that we're not going too high with these spikes right now. But another dormant indicator that we haven't looked at in a while would be mean dollar invested age, and that would show the average age in which investments have been sitting in their addresses without moving. And the higher it goes, the more of a signal that traders and addresses are getting very dormant. And that's the case right now. We're not seeing the kind of dip that we're hoping to see. It's just a lot of rising. And now the average age is up to about 333 days, which is the highest it's been since around December 2020. So almost a year and a half since mean dollar invested age is this high. That would be a bearish signal for sure. On a macro sense, we need to start seeing a little bit of tapering off here, showing that some dormant tokens are moving. For example, if we looked at, let's look at Tether for a minute, just to compare mean dollar invested age. I haven't looked at this yet, but I would suspect that that line is going down because of so many older tokens that are now moving out of fear of this unpegging that is going on. Why did I lose mean dollar invested age? Let's try this again. Okay. So as expected, we're seeing a dip right now, and it's a very, very recent phenomenon for Tether. So if I go back to just the last 6 months, so check that out. Even before the dip, look at how people were really starting to move their Tether at a pretty unprecedented rate with the expectation of this happening. So I guarantee there was some insider information going around here. And then when the big unpegging of Tether happened and the price fell to 95 cents temporarily, look at the amount of Tether that was moved out of dormant addresses that had previously just been sitting with their Tether, not worrying too much about anything. That's pretty significant, guys. And that would be the kind of thing we want to see when looking at Bitcoin, because that means that some of the capitulation might be happening, or alternatively, there are some whales that are trying to pounce and buy a bottom. But right now, even though we saw a big bounce in the last 12, 16 hours, there isn't much sign of a mean dollar invested age spike going on Bitcoin's network right now. And then a few final metrics on Bitcoin before we start checking out some other metrics for Luna and Tether and Terra USD. We already saw ratio of daily on-chain transaction volume, the whale transaction count. Yeah, we already touched on those last two, so we'll just move right on. Let me first look at NVT for Bitcoin, and that shows a promising sign with lots of circulation happening, as we showed at the beginning of this call, and the big rise that's happening. we're seeing a ton of circulation, especially compared to where market caps are now. Even without the spike of the last 3 days, circulation has sustained itself pretty well throughout 2022. So this model is going to see that and see that the price and market cap of Bitcoin is dropping despite circulation staying high, meaning that this bar is going to get lower and lower because the gap of price and circulation is narrowing. And when that gap narrows, we tend to see more and more bullish signals coming up. And we've already been in semi-bullish territory on this model for about 7 months now, because even back in October, we were rising in terms of circulation, and then prices started to fall. Obviously, we did hit that all-time high in November, but the average price was already going down. But circulation, you know, if up here was circulation, you know, it was going August, September, October, and then November, December, January, February, March, like it was all kind of staying flat here despite prices dropping. And that's why you saw the semi-bullish signal. And now it's actually halfway through May, it's actually showing a bullish signal where if it were to hold, it would be the first time we've seen a bright green, solid bullish signal since December 2017, which this model correctly predicted as the top, right? Because it immediately went to semi-bearish in January 2018, and then we had this long stretch of red where prices correctly declined. So I highly recommend, if you're a Sandbase Pro member, to check out this model. It can provide a lot of insight that you don't have to wait once a week for on these calls with me and Maxim. Also, Ethereum showing a bullish signal itself, which is very interesting because it had been in semi-bearish or bearish range going back to last June. So we're almost a year past the last time we had a bullish signal, which it correctly called as the price top at that time, before going to a long stretch of bearishness. And if this holds, we're in a pretty good spot for Ethereum, and the model would be predicting a rise. Keep in mind, it's not always going to be the case, but if you look at each individual month and whether prices went up or down based on color, this NVT model is right on Ethereum, probably even more than Bitcoin. It's quite reliable. And as long as you're avoiding these red areas, which we just were in February, March, and April, go figure, price went down, you can end up doing pretty well if you're monitoring Ethereum's here. So bullishness on Ethereum and bullishness on Bitcoin. We can even see some altcoins showing semi-bullishness for Matic, bullishness for Litecoin, semi-bearish for Chainlink, interestingly, semi-bearish for Ren, Augur, Neutral, and XRP Network bullish. So they're all over the spectrum right now, but at least the top two assets are both showing the right color on this model. Okay, MVRV, this opportunity and danger zone divergence model that I alluded to earlier. If we were to look at this 24 hours ago, all 30-ish or so assets that show on this chart were in the underbought zone and above this dashed green line. This dashed green line, of course, it's doing a refresh right now, but it shows when the asset is in a top 5% best setup in terms of trader losses, where if you bought into it, then it would be one of the least risky times to get in. And sure enough, when we were in that territory where everything was showing super underbought, that's when prices bounced. And now we're starting to see fluctuations all over the place, where some are still underbought, some are more neutral, and some are even showing overbought now because there has been such an enormous rise just in the past day here. I want to let this finish refreshing because there's some important stories going on right now, and different assets are showing wildly different things. But I won't just talk over it while it's loading. Let me show one other thing while it is, and that would be our new whale transactions model that I just released last week. And it's showing that there are, as you would expect, a ton of whale transactions happening across different networks. Some don't have enough data for today thus far, or at least the last 4 hours, but anything that does, if it has a green bar, that's the last 4 hours. If it doesn't have enough compiled for the last 4 hours, then it's looking at the 4 to 8 hour mark instead here in yellow. And then this black line and gray line. The black line is showing the last 4 hours and the average amongst all of these. Gray line is showing the last 2 days average. And long story short, whale transactions are up everywhere. The closer these are to 100%, the closer it is to the largest 4 hour interval that the network has seen in the past 3 months. So anything that shows like 99, 100%, it means that they're pretty much seeing the largest whale transaction count right now over any stretch over the last 3 months. Curve is up there, Chili's is up there. You can see AMP, Bancor, Binance USD. That's interesting to see a stable coin up there. You would expect that, where's Tether? Tether, here it is. Yep, Tether's way up there right now. XRP, there's a ton that are very close to their 3 month highs or even at their 3 month highs. Wi-Fi 100%. So right now, we can confirm this by looking at Wi-Fi's asset on Sandbase and switching to whale transactions and going to, okay, the 4 hour interval is there, last 3 months. So this is the current 4 hour stretch for Wi-Fi. You can see that these two spikes actually exceed it, but that's because this bar isn't complete yet. And the way this model works is it'll actually look at how far along it is in the 4 hour interval. That 4 hour interval started about 2.5 hours ago. So if we were to multiply the remaining hour and a half and the projection, it's expected that, where did it go? That Wi-Fi's bar right here will actually exceed this, which is why it's considered to be the top whale transaction bar over the past 3 months. So that's very interesting to see, but there are plenty just like Wi-Fi. I just picked it because it was actually showing 100%, whereas a lot of these are 97, 98%. Regardless, the moral of the story is tons of whale transactions are happening. You can see just how much one-day price changes are up with Loopring 34.2%, UMA 32.6%. Pretty much universally, all of these assets are mostly up right now, unless it's a stable coin. But look at the gray bars, that's the 7-day price change, still way down for a ton here, with many exceeding negative 20%. So now that the MVRV model is loaded, check out how much things have neutralized. So like I said, most were way up here in the underbought territory. But because the 1 or even 7-day for some divergences are now showing a lot of profitability for the average trader, that's pulled the averages down a lot. And you can see that, you know, REN, FTX, Engine, Decentraland, which had a huge run right when I was going to bed last night. These are all assets that have been pumping like crazy. And now the MVRVs are showing that they're overbought for the temporary time frame. Overall, though, we still see plenty of opportunities where there's semi-underbought, again, for Wi-Fi, Unised Leo, Uniswap, Sandbox, the Graph, lots of different assets. And I would highly recommend you check this one out. Bitcoin here, looking around neutral after the pump that's been going on just in the past day or so. Still slightly in the underbought range, but not by much. And then Ethereum around the same spot. Okay, why don't we check out a few altcoins? I wanted to really quickly just look at something for Ethereum, but while I'm looking, Max, if you don't mind, if you haven't already put up the poll, and if you already have, if you want to give me a couple of projects to check out in a moment, I can do so.
Oh, I haven't done a poll yet, but we had 2 requests already. One is 1 inch, and the other one is Maker. And
Perfect.
Maker is
Yeah,
somehow
both
related to the whole
ERC20s.
Luna debacle, so maybe that's interesting.
Yeah, I heard that. Maybe Maxim, when we look at it, can explain a bit more if he knows himself. I don't want to put him on the spot, but yeah, I'd love to hear a little bit about that myself. But as far as Ethereum goes, as expected, whale transactions spiked right at the bottom. That's pretty normal. Daily active addresses up huge yesterday. This was the highest spike in unique addresses on the ETH network since March 17th or 18th, so about 2 months there. The MVRV ratio went super down. It went to negative 30%. And if we take a look at the last time Ethereum got there, it's been a while, folks. It's been a long while. This, I think if we zoomed in, it would actually be a little bit above where it was now. But I know that last May, it got below negative 30% again, and that was around the last time we really saw it. So obviously that bounced up big time because Ethereum's had a pretty good run ever since 12 or so hours ago, and it's now bounced back into over the opportunity zone line at about negative 13%, but that is still well under zero, which is implying that there is plenty, or I should say much less risk in entering even now compared to the usual average of where Ethereum's network usually sits. Weighted sentiment, still a little bit negative, so there's some doubt in this bounce right now. That's a good sign. Mean dollar invested age is not really dipping at all like we're hoping, just like Bitcoin. So that is not a great sign. We want to see some dormant tokens move. Whales. So Ethereum's always a little tricky as far as whales go, but we tend to like the 100K to 1 million range. And I think it was the 10K to 100K range. So looking at these two, we do see that the 10K to 100K range is rising, but it's happening as 100K to 1 million is dipping. So they're kind of neutralizing each other out. I can merge them together and probably get a little better look. Yeah, and that's showing that there continues to be a bit of a dip. At its peak, this tier of whales was holding about 52.5%, and now it's down to 47.5%. So they've dumped about 5% of the supply over the past year. Not what we want to see. We obviously want to see more things like this where they're starting to accumulate once again, but it looks like the accumulations have all been pretty short-lived up until now. Change flow balance. We saw some interesting inflows and an outflow here, but nothing too significant. Network realized profit loss, just like Bitcoin, there was a big drop, indicating that a bottom was near, and it pretty much marked it perfectly. Development activity, pretty much run of the mill. Ethereum is always seeing 100 plus GitHub submissions per day that Santiment deems notable, so that's good to see. Social dominance is way down, interesting, at about 7.5%. If you guys remember, in late April, it was still really starting to get some traction as it was decoupling from Bitcoin for short periods of time, but that enthusiasm has faded and it's dropped back down to a pretty low mark right now. Talked about these. Okay. Yeah, so that's just a quick update on Ethereum. Max, I am going to check out 1 inch as requested here. I think that was the first you said, and then I'll check out Maker afterwards. So looking at the past 3 months, let's see what we can find. So 1 inch, obviously they had a nice decoupling last week from the markets. This rise right here was not what the rest of crypto was doing. The rest of crypto was either flat or going down. So this was drawing a lot of interest, and we saw that whale transaction counts were really firing off here. That was actually a signal that a top was likely near, especially because decoupling was happening here. Prices were going down for the rest of the markets, and whales were likely looking at that as an opportunity to either switch over to Bitcoin or just get out of 1 inch, knowing that a big drop could come at any time. And then once it finally did, we saw some accumulation happen here. If I zoom in though, so if I zoom in, this was actually kind of happening around a top, and it was profit taking more than anything else before another big drop. And we haven't really seen any whale activity of note ever since the drop, unlike a lot of other assets. So probably not a great sign for at least the short-term fluctuations of 1 inch, considering whale transactions have mostly dried up ever since the 2 profit-taking moments or 3 profit-taking spikes that happened a couple days ago. Daily active addresses. Let's zoom out to the last 6 months. So they are up a bit. We see that yesterday was the largest spike in daily active addresses since early March. So we're looking at a little over a 2-month high right now. That's good to see that utility is up. As far as MVRV goes, let's check this out. So plus 15% right there, negative 15%, about right there. So it just jumped back above the opportunity zone line of negative 15%. But remember, this is kind of just a ballpark. It's certainly not a definitive like buy here, sell here marker of any kind. But if you were to have bought in just a couple days ago after 1 inch bottomed out, you would have bought in while the average trading returns were below negative 30%. So that was a pretty juicy, opportune time. It is still of less risk to buy in now, but not nearly as much. You obviously want to avoid situations like these, like we saw in early April. 1 inch can get pretty volatile. So it was at plus 32% at its peak before correcting. So that's something to keep in mind. So, you know, depending on the asset, you could even say the more volatile ones could be more like negative 25 and plus 25%, because they aren't nearly as consistent and tight as assets like Bitcoin and Ethereum. And if you look at this, it's a lot closer to very, very consistent bottoms that occur whenever it goes below this line. And like I said, it just was a couple days ago, and now it's back above. Weighted sentiment, it does look like things are positive. So like a lot of altcoins, people are anticipating a dip by opportunity. But looking at things like whale transactions, it doesn't look like the whales are as enthused about this. I don't see anything special here. It looks like it was mostly just negative the last 3 weeks, and now it's looking positive again. We'd rather it still look negative, if anything. Mean dollar invested age, just a straight shot up. If we look at the last year, yeah, so the last time it really saw any move down was when there was this huge spike in late October, and it's just been climbing ever since. As far as whales go, let's check out what's going on here. So 1 inch is currently priced around just under $1. So if we look at the 100K to 10 million tier addresses, that should show us a little something. So that tier holds about a quarter of the supply, and it doesn't look like they've been doing much accumulating or dumping. It's been a lot of flatness ever since January. But overall, if we look at the last year, the pattern is still up, and that's a good sign. They were only holding about 5.5% at this point last year, and they have 4.5x'd their holdings ever since in terms of the overall supply of 1 inch. And because there hasn't been dumping, that's a promising sign, in my opinion. We've seen a lot of outflows going on. That's a good sign. We did see a few inflows, though, to compensate. But the largest by far was this outflow spike. So it does, I would imagine, as we get to supply and exchanges down here, that it's going to, I can find supply and exchanges, that it's going to show that the supply is, I'm just going to manually add it, the supply is going down overall. Yeah. Okay. So ever since late April, it has started to be to tick down once again. It is up significantly though, since a lot of the all-time highs in crypto occurred in late October, early November. So I wouldn't call this too promising. It is moving in the right direction finally, which is great, but it's up so much compared to the supply and exchanges of below 4% back in November, now sitting at almost 7%. So I'd like to, at least, if I'm going to be really confident, I'd like to see it drop down to like below 3.5% again. Network realized profit loss, not a lot going on there. Development activity, this is not a very developed coin, guys. So that's a bit of a concern in my opinion. We do see occasional spikes where there's, 15 GitHub submissions per day, but it's ticked down and there's really one or less than one GitHub submission per day right now. So, I'm not going to suggest that this is any sort of scam coin or anything. I think 1inch is pretty widely respected, but it doesn't appear that it has a lot of development activity. So it shows that the team behind it isn't doing a lot of innovating right now. Social dominance way up. That's interesting to see. And this is occurring like a week after it decoupled from the markets. I'm sorry, that's March. So this was the small decoupling right here. And social dominance is up to its highest point of the past 6 months right now, which is interesting. It's still a relatively small percentage of discussions, but it's at about a quarter percent of all discussions compared to the top 100 market cap assets. And that's a lot for a smaller asset like 1inch. I would fathom that it's a lot of people hoping that it's going to decouple again. There could be some fundamental event that I don't know about for 1inch, but all things considered, this is an interesting sign and a good sign considering it's happening as prices are bottoming. Not all altcoins that are bouncing are seeing these huge social dominance spikes like 1inch is. Let's take a quick look at ratio of on-chain transaction volume and profit to loss. Just look at the last 3 months. Okay, so the 1.0 line is about right there. We see that we were actually seeing 1, 2, 3, 4 straight days of traders causing volume at a loss compared to at a profit. It is back above that today, which makes sense because it has been bouncing, of course. It's back over $1.18. But you do want to avoid the really heavy spikes. They very clearly marked local tops in most of these cases. Right here, that was a local top. That was a local top. These were essentially local tops. This was a local top. And then this one was maybe a one-day delayed local top before it dropped back down. So look for really low markers like this, just like any asset on this metric, and you'll generally do pretty well at jumping in while other people are trading at a loss. Whale transaction count, we already touched on that. Okay, so that's 1inch. I'll move over to Maker now, and we'll see if we can get in a third asset after that if you have one more, Max. All right, whale transaction count, very interesting here. So there is one very overwhelming spike on the past 3 months of trading, and that was on May 10th, where we saw a total of 195 whale transactions occur, even though most of the time we're looking at anywhere between like two to maybe like 15 or 20 or so. So like 15 times more than usual, give or take, in terms of whale transactions. And what do you know, this occurred right at the local top when Maker was absolutely taken off. So if I zoom in here a little bit, this was a massive decoupling, as you'd expect. Not all assets were doing this a couple days ago. And as soon as it had that huge spike, whale transactions started firing off, and it gave up its entire entire run essentially for the time. And then it had another mini run just about 10 hours ago as I was going to bed. But we didn't really see any whale transactions this time around, and that's a good thing. It means that whales aren't viewing this one as a big profit take opportunity like they did for this. We saw a tiny bit here, but that's really not nearly as significant as the one we saw here, obviously. So I think this is a good sign considering whale transactions are down despite Maker really taking off over the last 10 hours and going well above most of the other altcoins. But look for a big spike for sure. If you see a big spike, especially as prices rise, be careful because Maker has shown a history of large transactions being a top signal. Daily active addresses. So we saw this spike here on the 11th. That was, of course, when it had its decoupling and the big whale transaction spike. So that was likely related. But overall, it's promising to see that there are clumps of daily active addresses that are all staying higher than the norm. And as long as that continues, especially if it's a nice gradual rise, that would indicate that Maker is starting to become more active on its network, and utility is starting to finally be prominent once again after this long, slow fade in daily active addresses, going down, getting below 200 per day after being up close to 1,000, going over 1,000 back at this point last year. So that would be a very good sign if this is the start of 200, 300 plus daily active address days once again. 30-day MVRV is very interesting for Maker. Let's bump this up to -25 and +25% here. There we go. So we saw it get below the opportunity zone on May 9th. It was down to -31%. And as expected, we saw a big bounce, probably bigger than most were expecting. But either way, this was a great buy bottom indicator. And the MVRV on that spike actually went right to 0, which is super interesting. Not well above it, not just below it, right at 0. And then it dropped back down to about that opportunity zone, just in the span of like half a day. And now it's bounced right back up to just a little above 0 at about 0.8%. So this is about, after all of this volatility that's been going on with Maker, this is about neutral in terms of average trading returns over the last 30 days. So you're neither at risk or making a very non-risky move if you were to add on or enter a position into Maker right now. Weighted sentiment makes sense that it is seeing a spike right now after it decoupled from the rest of the markets over the past 10 hours. This is the second highest spike of the past year and the largest spike of 2022. So be weary of the fact that there's a lot of euphoria going on. All things considered, when you see these spikes like there, or there, or there, or kind of there, it usually indicates that a local top is about to occur, or it's at least not far off. So keep that in mind. That's probably a bit of a concern in my opinion. Supply and exchange is also showing some interesting things going on where, over the span of about 2 days, it went from 8.6% all the way up to 9.5%. So, about a percentage going up in just a couple of days is not normal. You do see some pretty big fluctuations in Maker in very short periods of time, but we would much rather see things continue to move down and away from exchanges. And right now it's doing the opposite. So, I mean, it's likely a reaction to the price spikes that have been happening where people are looking to take a little bit of profit from their offline Maker and selling off a little bit. All right, whale time. So Maker's price is up there. It's at 1450 right now. So we're going to want to look at about 100 to 10,000 as a prime key stakeholder indicator. Let me get rid of the red line. So this is a good sign. So this tier holds about a little over 50% now. It was below 50% for the vast majority of the past year, getting as low as below 40% back in June of last year. But considering the key stakeholders are holding more and more, these are all addresses that hold at least $140,000 or more, all the way up to about $14 million. It appears as though they've got a lot of confidence in Maker right now. And I'd call this a very good sign that the trend continues to be that of a rise instead of, hesitance or even a bit of a dump. A lot of confidence in Maker right now, folks. Exchange flow balance, look at the major inflows that are happening, which lines up with the supply and exchanges increasing right now. We clearly see that this spike here has caused a lot of Maker to move back to exchanges, and it was right on par with the largest spike, the next largest spike that occurred back in September. The largest spike happened way back in last year in May, where a lot of altcoins moved to exchanges after this huge drop off and an entire crypto market wide tumble. Network realized profit loss. Interesting that there wasn't really any major positive spikes, only some negative ones where people likely were buying the top and then sold off at the bottom because they didn't believe it would recover. So that's a good sign, indicating there's a lot of losses going on the network without a lot of gains. And we'll check out the ratio of transactions and profit versus loss too, to see how that compares. If I can learn to type. Okay, so this is a good thing. If I mark 1.0, about right there. Let me zoom in a little so we don't have to deal with the skewed axis from that spike. So for most of the past 3 weeks, the amount of trading, the amount of volume toward Maker was happening at a loss, like literally every day for about 3 weeks. And then finally, after this breakout, we saw our first profit-taking day in a long time. And I think this is a current day, so it'll end in profit land, I'm sure, unless there's a massive drop off for the last, I don't know, 9 hours of today's trading. But considering this, it's a very good sign that there's a lot of blood in the streets still, even with a 30-day MVRV equalizing out. The amount of volume happening, showing capitulation and people giving up on Maker, indicates that buying in now would be going against the grain and what the crowd's expectation is. Development activity looks fine. It's not a seriously developed asset of by any stretch, but it is certainly one that is getting worked on by their team with double-digit GitHub submissions on a daily basis. Social dominance is on the rise. It's at its highest mark since back in mid-March, so that's a good sign. Mean dollar invested age is not moving down, so that's a concern. There's still a lot of dormant Maker that isn't being touched despite the volatility that's going on here. And yeah, we touched on these final two here. So Max Balresh, if you want to give me one more asset, we have time for that. And then Maxim and I will wrap up.
Okay, let's take a look at Ape, the Bored Ape ecosystem token. Sounds
good. So Ape is an ERC20. Many may be surprised by that, but it is. And we have some whale transaction count activity here. Nothing of note though. It looks like the major whale transactions were occurring back in late April, coming off of this local top. So this was all profit taking going on right here, folks. And right now it does look like things are looking like a Bored Ape, if you will. There's not a ton of activity happening, and until it does, we can expect that it'll likely be middle of the pack in terms of performance as other altcoins fluctuate. Daily active addresses also very low. I mean, the activity that was going on, utility here, just completely skewed the axis. So everything else is very low at the moment. MVRV, we don't have intraday. Let me see if we have daily MVRV at least, just to get a wider perspective. Okay, we do. That's funny. So the MVRV was just through the roof when it first started off. But if we look at just the last month, so yeah, the 30-day MVRV is still very, very low because of the fact that we had this going on and so many people buying Bored Ape when we were back here. So they were buying at the top, causing the 30-day MVRV to be below negative 40% right now. Pause to 15% here. So yeah, the last time we were actually in a topish territory was right here. It correctly called the local top pretty perfectly right there. In this case, you know, we're looking at an asset that's only been publicly traded for about 3 months. So I would recommend waiting till 6 months to start looking at MVRV and you know, some of these other metrics like daily active addresses more seriously. But we can still look at weighted sentiment. It's showing that people are starting to get a little negative about it. Obviously, euphoria was everywhere, and I think that until more time elapses, you're going to continue to just see mildly negative commentary unless there's a massive breakout for Ape. Supply and exchanges, 4.5%. It's about neutral. It does look like it's going up a tiny bit, which is normal for a new asset, but normally a new asset would actually start dispersing to exchanges a little more rapidly. So it's likely because, you know, it's 3rd month into existing in public trading, the price was starting to hemorrhage. So people are kind of waiting for the bear market to be over. And if, you know, confidence begins to increase, you'd start to see a lot more going up again. In terms of whales, it may be too early to analyze, but I'll check it out just in case. So the price is just below $10. We will look at the 10K to 1 million coin addresses and see what's going on there. It does look like there's some accumulation going on. These addresses only hold about 7%. So I would imagine that most of the assets are being held by very, very large addresses. Yeah, the 1 million to 10 million coin addresses just dominate here. And you'll probably see them slowly go down over time as it disperses to smaller addresses. But overall, it looks like the 10K to 1 million coin addresses, which is $100,000 up to about $10 million. That's a lot of money, and they do seem to be increasing their supply. So that's a good sign overall. It's showing that, you know, if it is a scam coin, who knows on Ape? I'm not going to even touch that, but you guys may have your opinions. It's at least a good sign that the really large millionaire addresses are not dumping their holdings right now. Exchange flow balance just about neutral. Ratio of daily on-chain transaction volume and profit to loss, we'll put it back at 1.0. So it was mostly losing days, as you'd expect. And then we finally had this big breakout where it saw twice as many transactions in profit versus loss. And that was the first time that's happened since April 29th, so about 2 weeks ago. And yeah, I would prefer to continue seeing bars below this line. Watch to see how today goes, to see if there's more profit taking or if things start to slip. And if you're buying in here, it's a more promising long-term strategy. Social dominance, not much going on here after its big hype, you know, a few days following its local top here. It's pretty much dormant at this moment. Mean dollar invested age, same thing. It's beginning to rise again after dormant tokens were moving a ton around this local top all-time high area. Yeah, okay. Yeah, I appreciate the suggestion on Ape. I haven't looked at it in a while, and it's a very fascinating new coin. But overall, guys, it looks like markets are going to continue to be volatile. That's easy to say. But in terms of what direction it goes in, we'd like to see that Bitcoin whales are accumulating instead of dumping like they continue to do. It is a good sign that there's a lot of loss still to make up for on, Bitcoin's and Ethereum's network. And it's a very good sign to see that NVTs are showing bullish signals for both of the top two assets in crypto right now. Overall, it's a very mixed bag. I would anticipate that, we may end the week on a little bit of euphoria. I don't even know what's been happening over the past hour. I'm not going to make any predictions, but if we see the week end with a little bit of euphoria, there might be a lot of people faked out come, Monday, especially if the S&P starts to slip again, and the S&P is having a very good day, which has a lot to do with why crypto is able to finally break out again. So obviously we want to see that correlation separate, and all things considered, probably some more bullish indicators than there are bearish indicators, but there are no guarantees right now as to whether the altcoin rally in particular will continue. We just have to wait and see. And I'd advise with your Sandbase Pro accounts, just make sure you're monitoring a lot of the metrics that we looked at today, especially the ones where you can look at them on an hour-by-hour basis to see if there might be a huge inflow all of a sudden, or massive whale transaction spikes coming up for an altcoin that's surging, which would tell you that they're taking profit and expecting things to go back down. Any final words from you, Maxim, you want to bring up about the markets, or just any thoughts about this week?
I would like to follow up at the end on what we talked last week when we were saying we must see a few specific parameters. If you want to talk about bottoms, now we see them. Founding rates went negative, and we see increasing Bitcoin dominance, which is also good. So we are in the area where it start making sense to play from the long side. All, of course, risk and concerned. But ideally, if we see for the next few days more increase in the price and regular negative rates in Bitcoin and Ethereum, that will be confirmation. For those who are looking for confirmation, there's always a way to do it. You wait for a few more days of price increase and negative founding rates, then decreased network activities, circulation, or the electrified addresses can use both if we see it good. Maybe increased deposits. In short, all signs are saying that quite a lot of market participants using as a chance to exit the markets. If we see it, great. Those who are looking for confirmation, this is what you need to do. Now, once we saw the initial set of good metrics, it's not a bad idea to play from the safe side.
Yeah.
That's it. Mm-hmm.
Well said, Max. As always, guys, stay safe. Do not trade money that you can't afford to lose. That's obvious investment advice for anyone here, but it's the only investment advice that we can give. Remember that we are here to give you metrics based on historical evidence of what typically happens in the past when they form in the patterns that they are right now. And just remember that we always have lively discussions in our Discord. If you haven't already joined, please do so. If you haven't already subscribed to our YouTube, please do so. It really helps with the algorithm and helps ensure that we are putting out content that can be visible to the crypto community. And we do think we have a pretty unique platform and service to offer. So spreading the word is always appreciated. And we wish you all a very safe and happy weekend. We'll talk to you next week. Cheers.
Yep. Talk to you next week. Bye-bye.